fellow investors, and welcome to Ritter on Real Estate, where we teach you how to passively invest like a pro. I'm your host, Kent Ritter, and today my guest is Jason Lee. Jason is the founder and principal of real estate brokerage firm JLM, and he's also a real estate investor himself with 75 units in San Diego County. And so he's got a couple different perspectives to share with us today. So Jason, first of all, thank you so much for coming on the show.
Hey, thanks for having me. Really appreciate it, and I'm honored to be on.
Yeah, so let's start at the beginning. So tell folks a little bit more about yourself and about how you got to be where you are today.
Yeah, so I came down to San Diego for school for college, and then kind of had no idea what I wanted to do. I was trying to see what industry kind of piqued my interest, and I kind of just fell into real estate because I saw that a lot of my friends' parents actually were successful in real estate that I met in college. So I got interested in that, and then started going to some networking events with the school, and met my old mentor who kind of taught me the entire business. I started interning at his firm as a junior. It was a commercial real estate firm in San Diego, pretty small boutique, but he really knew his stuff and taught me a lot of great principles on how to be successful. And from there, I closed, a few deals before graduating. I worked full-time senior year, got my license and just took night classes on Tuesday, Thursday. And as most people know, there's no salary in brokerage. So I made sure I had a little bit of a nest egg before graduating and going into it full time. And then from there, I just, kept doing the things that my mentor told me to do. I was in there every single day. And fast forward, 4 years later, I've sold a little over $200 million worth of real estate in San Diego. And I own 50% of a $30 million portfolio down here. So that's kind of my background.
That's awesome. I love that story. I mean, you're a young guy. You're what, 25, 26 or so,
Yeah.
and you've already accomplished so much. I think it's just a lesson to anybody on, it doesn't matter how old you are. It doesn't matter, where you start. You work hard and you can make it happen. And that's one of the beautiful things about real estate. It's like anybody can do it. It's all about applying yourself. And so here you are, mid-20s, and you've got, like you said, a $30 million real estate portfolio plus a thriving brokerage. So congratulations.
Thank you. Really appreciate it. Yeah, you're spot on. Real estate can take you really far if you just put in the time and the work. So
Mhm.
completely agree.
So I'm curious. You mentioned you had a mentor, had a mentor, and taught you some key principles, and really those have been following those lessons have been critical to your success. So what were some of those principles that your mentor taught you?
Yeah. So, he was the managing broker at my old firm. Until I left, I asked him a lot of questions and he taught me so much. But I think the biggest principle he taught me was, how to sell. I think going to meetings with them and hearing him on phone calls and seeing how, he took a sales call or a meeting to a close was really fascinating. He kind of took the consulting approach. He was never pushy, never, was a hard seller, but he explained his track record and what he could do for the client extremely well. Was a very good listener, asked the right questions. So that was one of the key principles. Another one was he just taught me how to generate business. In commercial real estate brokerage, as you probably know, Kent, it's a lot of calling in the beginning, a lot of cold calls, a lot of knocking down doors. And he just taught me how to do that in a way where, it just paid off, and taught me how to follow up correctly, because the money's in the follow up in real estate or in any business, in my opinion. So I think those three things are what kind of propelled me the most in my career.
And then how about from an investing standpoint? I mean, how did you figure out? So you built up a nice sized portfolio, about 75 units. I mean, tell us a little bit more about that portfolio and tell us, what made you realize that you wanted to actually start owning real estate on your own? Because I know a lot of brokers who aren't actually investors.
Yeah. I think the biggest thing actually was I helped so many clients, make so much money, and I was just seeing what kind of money they were making through these properties in San Diego. And not only that, but my broker was also an investor, so I kind of heard, how he was talking. But I think on the investing side, I mainly learned just from brokering deals, being in the business, and kind of hearing how my clients thought, because all my clients are investors. So that was something that was really fascinating, was because a lot of brokers, as you said, don't buy deals. And I think it's because they're comfortable where they're at, because the commissions are nice and investing in real estate's a lot of risk in their mind. But if you actually know what you're doing and you take a calculated risk, the downfall is very small and the upside is very high. Especially when like my best clients were buying deals in this market, or like 3 or 4 years ago, they always buy a deal where they could instantly add value, and they'd buy it for, you know, 20 to 30% below market value. So they'd, buy a deal for $1 million. They put, 100K into it, 200K into it, and then they'd be selling it with me for, like 1.7, 1.8 million in the next year. So, I did a lot of those heavy value add deals for my clients, and I was finding a lot for them. And eventually, when I could, I just bought my first one, and then um, just kept it rolling from there. I mean, I bought my first duplex for about $650,000. I added two ADUs, 2 units, 2 accessory dwelling units here in California. That's what it's called, by converting the 2 garages on the lot. I made it a 4 unit, and it recently appraised for 2.1 million. So there's a lot of upside in San Diego if you find the right opportunity off market. And that's kind of how I got into it. Just being in the trenches, being in it, talking to clients.
Yeah, absolutely. And so, San Diego is definitely a very different market than I invest in. We invest here in the Midwest, right? I mean, a lot of people, I think we hear a lot about what things in California, and maybe people have strong opinions on whether you should or shouldn't invest there. I think you're proof that, in every market there's deals, right? And so tell us a little bit about what's the market in San Diego like? I mean, what kind of projects work there? What doesn't work? And just give us kind of an overview on the market.
Yeah. I guess the basic overview from a macroeconomic scale I can give you is the reason why San Diego is such a strong market is because there's the four, corners. So to the west of San Diego is the ocean. To the south is the border, which is Mexico. And then to the east, it's the desert. And then to the north, it's a big army base, Camp Pendleton, above Oceanside, which is like the last city in San Diego County. Um, so there's a lot of building restraints where the weather is good and where people can actually live and enjoy the San Diego weather. So that's why there's a housing crisis in San Diego. So there's so many people that are trying to move to San Diego, and it's only accelerated ever since COVID happened, because now that people can work remote, people in San Francisco, LA, big cities, they don't want to, live there anymore. They want to come down to San Diego where it's warm, where they can be outside, where they're not, in a concrete jungle. So that has skyrocketed rents extremely in the last 2 years. And now it's going back to normal, and going up about, 5, 6% rents. But the rental market here is so strong, and there's not nearly enough housing. So if you buy a property that cash flows day one, or you can easily get to cash flow and a good return day one, it's really, really hard to lose. So from a macroeconomic scale, that's why San Diego is a bulletproof market, in my opinion. Even in like the 2008, 2010 financial crisis, Costar put out some data that rents actually went up a little bit in the worst of times. So that's why I love multifamily, or in any market, multifamily is always the most recession resistant asset class, because everyone needs a place to live, but not everyone needs a place to operate a business.
Mhm.
So, but from like a more micro scale, where you can find deals that really work in San Diego is where you can actually be, direct to an investor. I think if you have a broker who is on the phones, like my team, who is talking to, potential sellers before the deal goes on the market, I think that's where, there's true gold, where I found really good deals. So it's really hard to find a good deal that's on the market in San Diego. Yeah, you'll do well and you'll cash flow a little bit, but the return is probably not nearly as high as where you are, Kent.
Mhm.
So if you're looking for returns that are as high as yours in the Midwest, you got to be on the pulse of the market. You got to be doing things that other investors don't, because it's very competitive. So, with high competition comes a lot of demand. So there's a lot of appreciation. But what really high competition also makes it really hard for a first time investor to break into the San Diego market. So it's all about who you know.
Yeah, like so many things in life, right? So many things in life and in real estate. It's all about your network and who you know. And so, yeah, I mean, it makes a ton of sense. It's a competitive market. It seems like though I mean, what you're saying around just lack of available land, lack of housing, we're seeing that in a lot of places in the country. Sounds like it's the same thing there, and that's creating opportunities, right? Like on a macro scale, as you said. So I'm curious. I'm curious how your experience as a broker has influenced your investing. Has it made you, I mean, do you find yourself maybe doing some things differently or seeing some things on the broker side as you're doing all these deals and saying, I I need to do things differently as an investor?
Um, I think the way being a broker has influenced me is I think it's taught me how to be a really careful and smart investor because I think I've just seen what the best investors do. Because being a broker, I talk to a lot of clients every day, and everyone's a little different. But um, just from their track record and what their portfolio is like, I know who the best investors are. So I feel like I've been influenced by those who have the biggest portfolios. Like, for example, one of the biggest principles that I learned from a guy who owns over probably 2 or 3 billion dollars worth of real estate here. He told me when I was young that 3 or 4 years ago that he buys in all markets. There's a lot of people that try to wait and see what's going to happen, and they won't buy anything for 3 to 5 years for entire cycle. But he says if you buy a good deal in any market and you don't wait, you're gonna you're gonna get a lot of opportunity that others aren't. So that was one of the biggest things that stuck home with me. Another big one was, never buy a deal that day one that you can't have forced appreciation, meaning that if you can't buy a property anywhere and you can't, buy it and add value to it and up the
Mhm.
value by a lot day one, then you should stay away from that deal. So I think those two things, being a broker and just hearing those conversations has influenced my career a lot.
Yeah, absolutely. How about the way you approach your renovations? I'm curious if actually being in the buying and selling and seeing seeing what works and what doesn't. How has that influenced how you renovate your properties, or maybe the things that you actually do during your renovation?
Yeah. Renovation construction is always a tough process, as you probably know. I think the biggest thing was, um, in the beginning, it was tough to find a good one. I kind of got screwed over by my first contractor. So, the way I approach my renovations now and how it's influenced me as being a broker is, I make sure that the ROI is the highest I can make it. So, for example, if I'm in an area where it's like a Class C area, it's like a workforce housing area where it's not as nice, I'm not going to put in the nicest quartz countertops or the white checker cabinets that are worth, that are the most expensive at Home Depot or Lowe's or something, right? Because um, the return on investment won't be there because those people don't care as much about the necessities like that, about the luxury units. They just want a place to live where it's affordable. So I think knowing what appliances and what materials go in what market or what locations to get the highest ROI, so you're not spending an unnecessary amount of money, is really important. Um, Another way is just speed. I think speed is really important. I think, the longer you hold a renovation, the higher your carrying costs are. So I think trying to get it in and out and rent it as fast as possible is the number one thing, and then being cost effective is the second most important thing.
Gotcha. And how about, are there things that you've seen, um, different things that you're doing in your renovations? Have you seen create more value than others?
Um, it's a great question. I think having a good property manager that tells you kind of what tenants are looking for is extremely important. So our manager will lease the units, and they'll always get feedback from like what, like the potential applicants, like what they wanted or like what they didn't like. So I
Hmm.
think knowing exactly what your client base, your customer base is looking for in a renovation is really important. Like for example, like in San Diego, at least like super light tan vinyl flooring is in right now. And then a lot of tenants have been telling us they like, all white kitchens, like white countertops, white cabinets, stainless steel fixtures. So I think knowing exactly what tenants look for and having someone to give you that feedback, whether it's one of your investors or a property manager, your contractor, it's really important to know so you can get the highest rents in any market.
Hmm. Yeah, I think that's great advice. And something that you started off with, I just wanted to come back around to is just this idea of putting ROI, the return on investment, kind of the center of your decision making, right? I think oftentimes, especially newer investors can get caught up in, oh, this looks really nice, or this would be cool to do. But I find oftentimes one of the biggest mistakes people make is they overspend, right? They spend too much on renovations. They don't really get that return. So putting that ROI at the center and really making those decisions based off of how much more rent are you going to be able to get, like, or how much faster are you going to be able to secure a tenant, right? I think is critical in the decision making process.
Exactly. Yeah. I mean, very critical. I think that was very well said, Ken. I think there's a lot of people that I know and that you probably know that care about the shiny kitchen and the great bathroom, but they'll spend a fortune and they could have gotten the same rent if they spent, $20,000 less. So,
Mhm.
um, yeah, I gotta be focused on what money can be brought in if you spend an X amount of money. So,
Yeah, I think that's good. And then as you said, the approach from kind of the boots on the ground, right? Whether that's your property manager, the person that's leasing for you, somebody who's getting the feedback and incorporating that in, I think is how you're going to start to understand, right? What's going to demand more rent, what is not. Um, are there anything that you'd say that you guys do that are kind of unique to San Diego? Are there any things that folks expect in San Diego they may not in other places?
something that's unique in San Diego. You know, I guess that's a great question. I mean, I think what's unique to San Diego is that there's a lot of opportunities to add units and build here. It's really easy to, uh, let's say you buy a duplex or a fourplex, and there's a lot of land to build in the back. Um, the city of San Diego and the state of California has made it really easy to add what's called ADUs or accessory dwelling units to those lots. So, um, what's really cool is they get permitted extremely fast. It goes through a city in about 3 to 4 months, whereas like a normal development project takes like 1 to 2 years. Because of the housing shortage, they're making this a priority to get through the city and the system. Um, so what's really cool is we've been able to add a lot of value by buying these smaller multifamily and adding, an extra 1 to 4 units and then selling it as a 7 or an 8 unit. So
Hmm.
that's been pretty unique to San Diego, and it's been really cool because the city of San Diego actually really wants to get these through quickly, whereas other counties and um, other areas of California, it's not as ADU friendly. So that's been a unique way we've been able to add value to our properties.
Yeah, that's probably. I mean, what is like what's an average unit, like price per unit, go for in San Diego?
Um, average. So in like a really nice area, it would go for 400 to 500 a unit, and then in like a lesser area, it'd go for 250,000 to 300,000 a unit.
Hmm. That's still significant value add if you've got 4 units and you can turn it into five, right? Or like you said, two and turn it into four.
Yeah.
That's a incredible value add based on the price per unit.
Yeah, definitely. So like for example, if you were to do a garage conversion, because you can convert garages into ADUs in San Diego, if you were to spend about, $120,000 to do the construction, that's a lot of upside if your price per unit is 400,000 a unit. So
Absolutely. Absolutely. So, I mean, that's what I like, different strategies in different markets, right? You just kind of take advantage of what they're offering. And like you said, they're in tune to the fact that they need more housing and willing to kind of expedite these things. I think that sounds like a great approach.
yeah, what's unique in your market?
That's a good question. One of the things that's unique that we've been doing recently is actually we partnered with a fiber optic internet company to bring fiber internet to all of our properties. So we're actually, we're running the backbone and digging the lines and bringing fiber in, and in that way we become the internet service provider. So it's been a unique it's been unique in that we're able to provide a better product than kind of just a typical cable or satellite internet through fiber. And at the same time, we're also able to create an additional revenue stream for our investors that's not an additional financial burden to the the tenant, because typically we're intentionally charging, you know, 10, $15 less than they would than the competition would. And we're
Mhm.
just shifting kind of, you know, the tenant was already paying somebody for internet. They're just now going to pay us. So it's not a financial burden for them, but it creates a revenue stream for our investors. So we've been really happy with the approach on this over the past probably about 3 years since we started doing that.
Very cool.
Yeah, yeah, that's a good one. Um, well, yeah, well, so Jason, so as we, you know, I know that you've got a lot of experience in your time. I'm curious if there's some things we've already hit on a couple, but maybe there's some things, some lessons learned, or things for newer investors or folks that are out there looking for properties. I mean, where do folks get started, and maybe there's some things that you've learned along the way you can help them avoid some road bumps.
Yeah, I think something that'll be very applicable to your show, Kent, is kind of knowing who you are. If you absolutely love what you're doing and your job is great, and you're making good money, and you don't want to leave it, and you have a great career, I think it's really tough to um, get yourself another full-time job, which is real estate, right? Real estate is a
Yeah,
full-time job. It takes a lot of time out of your day. You really got to love it if you are the direct property owner. That's the manager and like the asset manager. So you kind of have control of the property. You're overseeing a property manager. You're managing the financials, managing the rehab, the acquisition, and the disposition. So if you're the one that wants to do all that, you're buying yourself another full-time job. So make sure you love real estate if you want to get into that side on your own. But if you're just looking to make money through real estate and you want to invest in real estate, I think the best thing to do is partner with an operator like, Kent or myself, and, let the money come in passively for you. Don't buy yourself another full-time job if you don't love real estate. If you just want the really good returns and you want the money, I think the best thing to do is just invest with a good and trusted operator.
yeah, and I appreciate that advice, and that's advice I often give as well, because I mean, a lot of people that I meet are highly successful in their field, and they're great at what they do, and a lot of them, which I think is cool, actually like what they do. And so, yeah, I completely agree with you. I'm very big on the focus on finding your highest and best use, and then really just leaning into that. And if you've already got a successful business, your highest to best use is probably continuing to generate cash flow and grow that business versus, like you said, taking a, you know, a 180 and over here and trying to learn something completely new. So I think that is well said. I think it's a good lesson. And I think that's what's cool about real estate, is that there are ways to do it. You can be as active or as passive as you want, right? Based on where you are. But I do think it's important to understand. I mean, like you said, it really is a full-time job. And I think people hear real estate as passive, and um, they don't expect how much it can really take if you're that owner operator, and you're the one, you know, really making the decisions and answering the phones, dealing with
Definitely.
contractors and all that stuff. It's not that fun at the end of the day. So yeah, I think that's well said. How about this one? So just from your broker perspective, a lot of the questions I get from newer investors are, you know, how do we engage brokers? How do we start to build? Because I tell everybody you got to start building broker relationships. They say, well, how do you do that? So, what do the successful investors that have built good relationships with you, what do they do that creates that strong relationship and makes you take them seriously?
Yeah, that's a great question. Really good question. I think the biggest aspect, Kent, is doing what you're like doing as taking action and actually doing what you're, okay, I'm trying to say this the right way. Actually, like following through with your promises. Sorry.
Yeah.
So, like, for example, if a client tells you that they'll pay, or investor says they'll pay $2 million for a property, and you go into escrow and they say they only want to pay 1.5 million, and the deal gets ruined, and that's the first time I've worked with you, I'm probably never going to send you a deal again, because if the broker doesn't get paid, the deal doesn't go through, the broker doesn't want to work with you again, right? The brokers want to do right and help you get the best deal, but if you just retrade the deal, which is lowering the price or changing the terms for no apparent reason, that leaves a very bad taste in any broker's mouth. So that's number one. I think number two is you got to get on the phone. I think there's a lot of like spam emails and spam texts we get saying that we'll, buy your properties for cash or, we'll close quickly, but like it's like a robot texting us. So
Hmm.
I think the human to human touch is really important. I think if you're someone who, truly wants to get into real estate and wants to buy your first property and you're honest and you say, what you can take on and what you're willing to do and, and you follow through with your promises, I think you're well on your way. I think the third tip I can give is never try to reach in the broker's pocket. I have a lot of friends in the industry, a lot of brokers, a lot of agents, and they typically never send the best deals to the clients who have tried to, ask for a credit out of their commission to lower the price or to lower their cost. So that's a huge. Make sure the broker gets paid and make sure you treat them well because that broker, if they have 10 to 20 years left in their career, they could send you deals for the rest of your life. So if you do one thing to kind of screw up that relationship, you're going to miss out on a lot of opportunity for just one deal that you might have, seen get better because the broker gave you their commission or because you asked for a huge price reduction and it caused the broker a lot of stress and now they don't want to deal with that again. So
Hmm.
just think long term. Think long term
Hmm.
is my number one advice.
Yeah, I think that's excellent advice. I think so many people think short term about that individual deal. How am I going to make an extra 10K on this deal or whatever it is? And not about the fact that you're going to want to be doing business with this person for the next 15 years. And so I think that that's fantastic advice to give to new investors. So I appreciate you sharing that. So Jason, as you look out on the rest of the year and where you're going, you've obviously grown a ton in the past few years. What does the future look like for you and for JLM?
Yeah, great question. I think we just want to keep, helping clients get into deals in San Diego. We want to keep growing our business and help my young guys that I've hired become established agents, and then just want to continue to grow the portfolio. So um, that those are my two goals, and just trying to better myself personally and in business every single day, and just get better.
Awesome. Awesome. Well, let's get right into the keys to success round. I got 4 questions I want to ask you. The first one is if you were going to invest in somebody else's deal and you could only ask them one question, what would that one question be?
The one question I would ask is, you know, could I talk to one of your investors who have invested with you in the past?
Yeah, check references.
Hmm.
Absolutely. What are you most proud of in your career?
Um, I think I'm most proud of the success I've had in investing. I think it was extremely scary for me at the start, but getting over that fear and those limiting beliefs and actually buying that first deal and continuing to grow it has been the most fulfilling thing for me.
Yeah, awesome. Yeah, and congrats on all the success you've had. What's a book that everybody should read?
How to Win and Influence Friends is the number one book. I think any business is a people business. It's all about and manage people and communicate with people. You'll be unstoppable.
Gotcha. Yeah, absolutely. It's all about relationships. And last but not least, what is your number one key to success?
I think my number one key to success is probably consistency. I think there's a lot of people who are extremely motivated that start and then they stop doing the things that'll make them successful because it's a long-term game. Real estate
Mhm.
takes, a while to get started. It takes 6 months to a year to really get your first deal and get going. So I think consistency and having discipline and knowing that what you do every single day is getting you one step closer to where you want to go. You're chipping away is really important. It's really hard when you've been working for 3 months and you haven't seen a single paycheck. So I think the best advice I can give is if you're listening and you're in that phase, just keep going. It's gonna come through. You're gonna get the deals that you wanted, and just keep pushing.
Awesome. I think it's great advice. Consistency and sticking with it. I mean, that's so much of success is just showing up every day, right?
Exactly.
Yeah. Well, awesome. Well, Jason, thank you so much for coming on the show today. If people want to learn more about you and what you're doing and learn about how to get in contact to buy some properties, how can they reach you?
Yeah, the easiest way is to go on our website, which is jlmrealestateinc.com, or you can reach out to me on my social media. It's Jason Joseph Lee. So that's all my handles for my socials. So yeah.
Awesome. Well, we'll link all that below so people can get in touch with you and we'll get some more people trying to buy in that beautiful San Diego market. With that, Jason, thank you so much and hope you have a great rest of the day.
Thank you so much, Kent.